asking, are we heading into a recession? So Europe is already in a recession. Yes, it has inflation and it's deindustrializing. Germany is deindustrializing, DE, and but the US is not. The US is not in a recession and it's not heading in a recession anytime soon. And I actually talked about that on my market update today. So the US is not, to answer your question. So I can give you the numbers actually. They're right here in front of me. Okay, so so I wrote I'm so tired of hearing about this effing recession that is imminent and or happening right now in the US, while we are at full employment and the also aggressive rate hikes still below the inflation rate. So here's a few reasons for you why the US is not heading into a recession. So the average money market, right? The average money market chart, which are savings, is at 3%. Okay. Less than 4% unemployment is full employment, right? So the US is at 3.5%. So that's full employment. The inflation rate is 7.1%, and it's projected to go down to 6.6% tomorrow because of the base effects. I explain what that is in other videos and on my newsletter. According to Shadow Stats, which is the website that is currently open, which you can see if you are watching this directly on my Discord channel, shows an inflation rate over 10%. Okay, and mortgage rates are at 6.4-ish% for a 30-year mortgage in the US. So when you can get a 30-year fixed mortgage for less than the inflation rate, that's not exactly fighting inflation, is it? Money market accounts aren't even half the inflation rate, which is hardly encouraging saving and discouraging spending, right? And even personal loan rates are on par with the actual inflation rate if measured the way we did in the 80s, like shown in the chart. Take all of that with the fact that we are at full employment into account. The last several job reports have been positive and the government has already bailed out the bond markets behind the scenes. I talked about that a lot too. I call it stealth QE. Stealth QE operations are all ready to go they're all ready to go. The Treasury already told us that they're going to bail out bond markets if bond markets fail. That's why the recession narrative is pushed so hard, because they want you to buy bonds. Because if they buy bonds, that is also known as monetizing the debt, which will be necessary if you increase rates above 5%. So stealth QE operations are already to go, and the bailouts for Credit Suisse and Deutsche Bank already happened. So where exactly is this apocalyptic recession going to come from? Exactly, where is it going to come from? So I'm answering your question without even reading it. Will the USA potentially go into recession at this current economic state? No, it's not in a recession. The US is not in a recession. Will it eventually enter a recession? Yes. A stagflationary recession, which I've been talking about for over a year and a half now. For almost 2 years, I'm talking about this. But these things take time. Anyways, so yeah, that's the answer to your question. What is stagflation? So I'm not sure if that's actually a real term. I mean, stagflation is a real term, but stagflationary recession is like something that I only heard me saying. So stagflation is when you have a stagnating economy and go into recession and you have high inflation. So the recession we are going to enter next is not due to a shrinking GDP and a shrinking economy and demand destruction like they have been talking about for over a fucking year. It's going to be because we have sustained high inflation. So stagflation is the worst of both worlds, where you have a recession plus an inflation. So very, very bad. So I'm just sharing the screen, but I don't know. I'm not sure why it shows the entire OBS window for you guys. That's not what I want. I just want you to see what I see, basically. Stream. I'm just gonna share my screen, I guess. Okay, I'm just gonna share my entire screen. I don't want to show you like all my files and stuff, but I guess. All right. What do you think about gold in the short medium term? Good. Gold was actually the best performer this year. So the first week and week and a half was like gold miners, like junior miners did even good too. So I have actually some of my sponsors are like junior miners. You should check it out. Yeah, actually I should include my sponsors maybe on Discord as well. Guys, if you want to see my screen, what I'm sharing, you can join Discord right now and actually watch me talking too. So you know, if you have questions, maybe we can Discord. Yeah, link in my bio. The US might not get into recession after all. Yeah, I just talked about it. But they will eventually, but not like an imminent recession is not upon us. So, yeah. Okay, so it's the first time I'm live. I'm not actually sure how many people are watching. It shows a number. It shows like 25 people from the chat are watching. So I'm guessing. Let me just check my permissions so you guys can actually chat. Yeah, you should be able to send messages and stuff. So excuse me, it's the first time I'm like streaming like this, so I'm also a bit flustered, a little bit. But yeah, you can actually join the Discord and write in the chat there as well. So you should be able to do that. Just gonna write the first message just to see. All right. what is happening with natural gas prices? I don't know, Mehmet. Bilmiyorum abi ya. It's just fucking, it's really stupid. Like, the manipulation is just out of this world. The natural gas. So one guy commented under my video, so how's your bad weather prediction for Europe going? And then he says like, yeah, how's it going? Like, NG's crashed and your predictions are shit basically. Like first of all, I never predicted bad weather for Europe only, okay? And I never predict anything. I always say I'm using a strategy called sector rotation. I'm not a weatherman, I'm a farmer. In the winter, I know it's going to be cold, but I can't tell you when it's gonna snow. I can't tell you, I'm not a weatherman, I'm a farmer. Same with sector rotation, my investments. In the current economic environment, you want to be in commodities because of high inflation and relatively low interest rates, which are rising. That's the environment. But what happens on a specific day, or if there's government manipulation and a gamma squeeze in natural gas, did you see that coming? No, I think you didn't see that coming either. Okay? So, there was a polar vortex cyclone bomb hitting the west coast in the US. Okay? So I'm not just talking out of my ass. It took out the power grid, and more than 100,000 people in California had no electricity. Okay? So I'm from the West Coast originally. We had the coldest weather in like a long time, and the highest amount of snow in a long time, while the East Coast and Europe was relatively warm. Okay? So I don't know if you know this, but winter is not only December, the first week. Winter is officially on the 21st of December. That's the official date for winter. So for the first 2 weeks, of winter officially is not all of winter. Winter is also January and February. And we had unprecedented hot weather, warm weather, like in years in Europe. I don't know, maybe God is on the side of the global homo agenda. I don't know. Maybe God is a progressive and protecting the progressive agenda. I don't know. Okay? But this is biblical. You didn't see this coming. I didn't see this coming. Okay? So NG is super manipulated. Okay? They're keeping natural gas prices artificially low to fill up their reserves with cheap natural gas. Okay? So that helps out Europe. And it hurts Russia. Because, in case you didn't know, the US is in an economic war with Russia at the moment. The low prices hurt Russia. But you know what low prices also do? Do you know what price is? Let me give you a little economic lesson, okay? Okay, so fudging with commodity prices. So the whole point for future markets is to avoid shortages and keep prices relatively stable. That's the whole point of future markets. That's why you have a stock market and you also have future markets, okay? So if you as a government or governments start to fudge around with price in future markets, there's one thing. Price doesn't just exist. Price is not just there that we just made up. Price is a function of supply and demand. It's a function of supply and demand. What price also is price is a signal. So when prices rise due to inflation, then you create an incentive to create demand, to create supply that meets that demand, and a price is created. So increased prices create supply. So what happens if you, during winter, during a polar vortex that hit the West Coast, What happens if you artificially keep prices low so you can hurt your economic enemy, or you can help out your European friends, or whatever it is? It doesn't matter what it is. You're fucking with prices. What happens if you keep them artificially low? You know what happens? Supply is not created. There is no incentive. When prices are low, prices for natural gas at the moment are so insanely low. They're at spot price. They are at like production cost price. They're lower than it was back in 2021. So there's less future contracts made. There's less orders made. There's less supply coming online. So what do you do when those future contracts that you artificially kept low are rolling over in 1 month, 3 months, 1 year? What happens if demand actually goes up because it's summer, or it's the winter of 2023 and you actually need that gas? Now you have not enough supply. What will happen to price? Prices will go up, go nuts. And now you don't have supply. And people are gonna unnecessarily die. Like, if you fuck with Tesla prices or with some crypto, it doesn't matter. But if you fudge with food and energy, what people need, people are gonna die. And this is what's going on here. So anyone commenting, oh, how's your prediction going? Oh, fucking idiot. Why are you even on my channel? Why are you even in my comment section? Like, you saw that coming? You saw that coming, huh? Yeah, I'm sure you did. I'm sure you did. What is your view on index and S&P 500? It's still gonna go down, Ben. The S&P 500 is mostly tech. Okay, I'm not sure. Are you watching from Discord right now? I don't know. But let me show you. Wait, let me open. So if you go to the line stand, and then you go to sector rotation, yeah. Hang on, my sector rotation guide, where is it? I'm just gonna open it on Discord at least, okay, so you can see it. Can we see your trading screen? You can on Discord. You can. Just click the link in my bio, go on Discord, and you can see it. I'm gonna show it here too, but it's better if you just see it there. Or I think you can see it. It's the first time I'm streaming, so please forgive me, senpai. Okay, I'm just gonna open that chart, okay? That's freely available on Premium, on Discord Premium. It's available in there. All right, okay, so it's open now. Okay, so what I think about the S&P 500. Okay, so let me give you a little economic lesson. Economic lesson number 2, okay? Highline, you're doing a great job. Keep doing what you're doing. Thank you. All right, I'm gonna share it here on TikTok too, but if you want a clearer view, just come on Discord. You can watch me right now streaming for free, okay? So, but if you want to support me, of course, you can join Premium, and then you can actually join the conversation too. All right, so let's flip the camera. Here we go. Okay, so you got 4 phases of the economy. You got the expansion phase, the boom phase, the recession, and the depression. So each phase is like each season. So you got spring, summer, autumn, and winter. Okay, so that's not actually happening. The business cycle is not actually happening like in the like spring, summer, and stuff, in the seasons. But it's similar. It's an environment you're in, just from an economic view. So in the expansion phase, you have low interest rates and low inflation. That's where these sectors here are going to be the best performers. Why? Because low interest rates and low inflation helps consumer discretionary, information technology, and communication services, because they can get cheap loans, they can invent a new iPhone, whatever they need, which takes lots of cash, lots of speculation. Those assets are going to be better off than other sectors because they thrive on cheap money. Okay, that's why this is red. Red is sell low, sell high, and green is buy low in preparation for the next phase. Okay, so you have low interest rates and low inflation here. Then as we move into the boom phase, inflation heats up. So the transition, so the difference between expansion and boom is the inflation rate. So inflation is high here and interest is still low. That's why you're in boom. If inflation is low and interest is low, you're in expansion phase. So I sold my Tesla shares, for example, in 2021. December 2021, I sold Tesla at its highest point, and I sold it, and what did I buy? I bought commodities like energy, materials, and industrials because I knew inflation, we're heading into inflation's heating up. So I prepared for the next sector rotation. So the next rotation, now I have energy, materials, and industrials, which I also sold, but I'm still in it. Why? Because here you have high inflation, low interest rates. In the recession, you have inflation going down because interest rates spike rapidly because the Fed steps in. So in the recession, you have relatively high inflation and you have the interest rates at its highest points. That's what the recession is. Okay? And then in the depression phase, you have inflation at its lowest point, you defeated inflation, and you have interest rates going down as well. And interest rates at their lowest points and inflation at the lowest points, you're back at expansion phase. Okay? So where we are right now. Where is inflation? Is inflation still rising or is inflation like going down? I mean, the CPI tomorrow is going to show inflation of like 6 point something percent, like 6.6%. But that's because of the base effect. The actual inflation is still rising. Inflation is just rising at a smaller pace, but it's still rising, okay? So it's still rising, okay? So we must be here or here, depending on the inflation, right? Okay, how about interest rates? Are interest rates going up? Or are they going down? Or they're going up. So we can't be here, so we must be here. We must be here somewhere, okay? Are interest rates at their highest point? No, they're not. They can't be. Interest rates cannot be above the inflation rate. For the recession to work, like for inflation to come down, you need to increase the interest rate above the inflation rate. Can the interest rate go above the inflation rate? No. There's a little problem, which is called $30 trillion of debt. The debt payment is based on 2% inflation. If you have the interest rate at 5% or 6%, what everyone is expecting the Fed to do, you cannot pay off the debt. The debt payment will make the government insolvent within a year. Like immediately insolvent. The debt payment will be above every other payment. That's why interest rates cannot rise above the inflation rate. And that's why the Fed is not actually fighting inflation. They just want you to think they're fighting inflation. Okay, so where are we in the cycle? We are right in between here. We're right in between. We are in the worst of both worlds. We're not in the recession in the US, right? But we also have high inflation, which is not going to come down. It's going to seem like it's going to come down because of the base effect, but it's actually not. Okay, so if you have high inflation and you have rising interest rates, where do you want to be? Let's read the boom description, the boom phase description. Inflation creeps up, inflation rate goes up, yeah it is, and the economy peaks. That's where we are right now. You want to be in commodities. You want to be in assets that still go up. Okay? So this is the business cycle. This is not just happening within a few months. And it doesn't change. It doesn't prove this wrong because natural gas, crashed because of completely different reasons. So there you go. So what you have to do to make money in markets currently is you have to differentiate between a fundamental change in price, okay, and a irrational change in price. So do you think during the winter, let's take natural gas. We're talking about natural gas anyways, right? Do you think during the winter, during a polar vortex hitting the west coast, natural gas prices going down, is that a fundamental change in price? Or is that an irrational one? Do you think in winter people are going to heat more or less? Do you think natural gas is needed more during the winter, especially during an extra cold winter, or less? Obviously, it's an irrational change in price. Ta-da! So if price sinks and it's an irrational change in price, you want to buy. So let's say it's summer. It's summer and let's say winter is over, we're heading into spring. Sorry, not summer. We're heading into spring and prices go down slightly in natural gas. Do you think that's a fundamental change in price or a irrational change in price? Should you buy the dip? No, you should not buy the dip because that's a fundamental change in price. Because when winter is over, during the spring, there's not as much demand for natural gas. And in the summer, natural gas demand actually goes up even more than during the winter. You use actually more natural gas for summer demand than for winter demand. That's also known as aggregate demand. Many of you also conflict aggregate demand with inflation. You have lumber prices going up. Let me give you another economic lesson, okay? Okay, we have a full economics lesson today for free. All right, what is aggregate demand? Okay, so I see a lot of people saying, oh, look, used car prices are coming down in price, so inflation is coming down. Or lumber is coming down in price, so inflation is coming down. You dipshit. It's not coming down. It's called aggregate demand. So aggregate demand is, let's say you're building a house. Okay, you're building a house. All right. And for that house, you need materials like wood. So during the summer, you build a lot of houses. Lots of houses are being built during the spring and summer. So when wood prices go up due to inflation or whatever, and you're also heading into like winter, you can just wait for next spring and summer and then continue building your house. So during the winter, like autumn months and winter months, wood prices go down again because not as many homes are being built. Okay, how about car prices? Okay, you need a new car. Okay, well, you need a new car, but you see prices going up because of a supply chain issue. Okay, you're just not gonna buy another car, a new car now. You're just gonna buy a new used car next year. Doesn't matter. Okay? And when prices go down, you just buy them again, and then demand goes up again, and then the price adjusts depending on that. It's aggregate demand. So aggregate demand is natural gas. Natural gas goes up. The demand for natural gas goes up during the winter and summer because it's needed more, but it's going down during the autumn months and spring months. That's aggregate demand. Okay. But you know what's not going down in price? So you can postpone building a house. You can postpone buying a new car, used car. But you know what you can't postpone? Filling up gas. You can't just not go to work for 2 weeks. Food, you can't just not eat for a month. So food and energy are key, and food and energy is not going to come down in prices. So no, inflation is not going to go down for food and energy, which are like the main factors for inflation. You measure it. So anyways, but US can continue to increase interest rates and print more money to pay debt. Yes, because they're gonna monetize the debt. They have to monetize the debt to do that. Do you know what monetizing the debt also is? Is causing hyperinflation. Thank you. You're welcome. And in German? What do you mean, and in German? Join my premium newsletter and you can get all the information you want. Or you can talk to me or something. Hi bro, long time not see you. Hey man, how are you, man? Where are we now in your opinion? I just explained that. Okay. Alright, I'm looking more into the TikTok stream than into the actual stream I'm recording. Anyways, let's see if we got some more questions from the Discord stream. Okay, no questions. No questions in the free chat either. Okay, no problem. Thank you for the rose, man. Thank you. Such a gentleman. Viewership. Dankeschön. You're welcome. Yeah. So yeah, try to join me on Discord. It's the first time I'm actually streaming from Discord. Like where you can see actually my screen and stuff, you know? So it's called Line Hangout. You can just join. What are you talking about today? Oh man, everything. Natural gas, inflation, everything you want me to talk about. But we can also talk about, I don't know, something else, like video games or something else. It's up to you. I'm just answering questions right now. I don't have a specific topic to talk about. Do you believe in technical analysis? No. No, I think technical analysis, like there's lots of people on my premium newsletter, on my premium Discord, that do technical analysis, and I don't know, man. I respectfully watch, but I think technical analysis is just astrology for men. And mortgages? What do you mean, mortgages? Oh yeah, I'm talking about mortgages and rates and stuff, yeah. Why you like talking something like that, bro? Just asking. Like, what do you mean? I noticed that, yeah. A mortgage ending in 2 years, would you fix the rate for 2 years or risk the rate of a possible real rise 20%? Look, if you don't have a fixed rate, you're kind of fucked, because rates are still going to continue to go up. Okay? So, like, I don't know. If they start monetizing the debt, like the rate can go even higher, and that will affect housing prices even more. So it's really hard to tell. Like I'm not a pro in real estate, but somehow I agree with you about technical analysis. Yeah, it's just garbage. Maybe it's like maybe if you look at volume, you know, like you can look at, like, let's say a very small like penny stock that has relatively lots of volume, and thus it's very volatile, So you can check the volume that it's trading at on that specific time during the day. And then you can say like, okay, like maybe the volume would be the highest in the morning or something. And then you can trade based on that. But like other than that, like I could be sitting next to you, flip a coin, and be just as successful of a day trader as you. I don't know. So there's like very successful day traders, like 1 in a million, I think. But I don't know. Like I know they look at volume, and but they don't look at. I don't think they're looking at like the shoulder and this and that. Like look realistically. What you're trying to do, you're trying to compress a lot of information and a lot of moving parts into something simple. Into something simple that you can explain, that gives you the illusion of control. But look at natural gas. Look at like fundamentally, if things change, like I rotated out of tech before tech sunk. I sold my S&P 500 stocks before it was sinking. I didn't need to look at charts to predict that tech is sinking, is gonna sink in a few months, because I know how economics works. So like, so I don't know. You talk like a professor. Thank you. Actually, I don't know what you talk about. Are you discussing something? No, I'm just answering. I'm just talking about stuff you guys are putting in the text, in the chat. What do you think the best investment is in the market? Stocks, gold, silver? Like I wouldn't be in stocks, but like commodities, energy and industrial metals for until summer are gonna be good. Gold, silver always. Like gold, silver, oil, yeah, you nailed it. But I would also hold lots of cash, so you can like there's another lesson for you guys, like what happened in natural gas, that shit can happen, that's why you shouldn't use leverage or like short things or try to time the market. That's why this shit doesn't work. So that's why I'm okay with natural gas. Like I'm fine. I still did well for the year, even with the drop in natural gas, and it is gonna come back. I know. There's like I'm pissed. I'm really fucking pissed, just as you, but I'm not worried. I'm not worried. So I'm not understand anything you say about, maybe because I'm still a kid. Maybe how old are you? I'm 25. What do you mean? You're almost same age as me. What do you mean? You're a kid. Maybe it's the English. Or maybe you just don't know what I'm talking about. Like, economics and stuff, like it's not your fault. Like you don't get that shit taught in school. They don't teach you this stuff in school. Right? They want you to be a poor worker for the rest of your life. Just be a slave. So obviously they're not gonna teach you that. What's your prediction for 2023? What do you mean? I just said, you want to be in industrial metal? Like that's what I'm gonna do. I'm gonna be in industrial metals and energy. I got my gold and silver last year. So you 25 too? No, I'm not. I'm 28. Actually, I don't like study. Okay. But you can do a good like trade job or something. Like you always have to study. Like if you become an electrician or something, you still have to study. Like there's no way around it. But if you want to make decent money, and like it's a hard job, but it's not like hard in terms of like using mental capacity. You don't need that much of like I don't know. You don't need that many qualifications. You could be a trucker. Trucking is a really good job. You're like on the road. You're like freer. You can just bounce. You can have your own truck. You can get your own contracts too. You make decent money. Yeah. Worst case, you learned how to drive a truck. Like trucking is really good, especially if you're like in Alaska or something, or like in Europe. When you do like inter-European countries, like I mean, better than working at a call center for like minimum wage. Energy stocks and metal mining stocks. Look, I'm not in stocks, biochip. I'm in commodity futures, and I'm gonna stay in commodity futures. But you're German, right? So futures are available to you as well. Look, I'm not recommending anyone to get into futures, okay? Unless you really know what you're doing, or unless you're following me on my premium newsletter, right? Like if you're on my newsletter and you know what we're doing, okay, sure, ask me about futures and stuff, okay? But other than that, no, I would not recommend. You can do what you do best. If that's stocks, then you do stocks. They're more risky but leveraged. No. There's future ETFs that you can buy. CRB, CRB, Core Commodity Futures of Trade Republic. Not leveraged. But don't just buy it because I say, right? You could have the exact same investment as me, but you could be losing money while I make money because you don't know what you're doing. So unless you're not on my newsletter, unless you didn't go through the Academy server on my newsletter to understand why we invest in futures, to understand some economics, some sector rotation, I would not suggest you invest into futures. It can horribly backfire. Look at natural gas. If you don't know what you're doing, you would be like, oh shit. You'll be losing all your money right now. Probably be selling at a loss because you don't have the emotional maturity to like trade. That's what the newsletter is for. That's what the Goldi market updates are for. It's not just like some newsletter, it's a market update. So you have to be following them. Goldi's market updates. Malaysian have durian season now. You like durian, right? I love durian. Wait, Emeralds, are you from Malaysia? You're from Malaysia, right? Oh yes, you're the Malaysian guy. Emerald, I totally forgot, bro. Okay. Nice, yeah. Dude, like, let's stay in touch, okay? Like, message me on Instagram or something. I'm planning to visit Malaysia one day, so we should definitely meet, like in KL, or you're close to Singapore, right? Bahru, right? Why are big tech stocks rallying? Oh, Dharma Kid, that has a very simple explanation. Because used cars are coming down in price, so that obviously means that inflation is gonna come down in price, right? And CPI numbers are gonna come out tomorrow, and they're expected to be lower, like 6.6% from 7.1 from last year. It's not because of the base effect and how year-over-year inflation is measured. No, no, no. Get that out of your head. Inflation is actually coming down, right? So let's just dump commodities and invest into big tech stocks just because. Yes, I'm Malaysian. That's asking about testosterone. You forgot me. No, I wasn't. Yes, you're right. Johor Bahru, yeah, close to Singapore. Nice. Yeah, I'm definitely gonna visit. Definitely gonna visit. Like I would I will need your help, I think, in the future. Like if you can help me, we can help each other, that would be really cool. Do you think Chinese stocks will boom since there is no QT? No, but I'm actually really. Oh, there's no quantitative tightening. Oh, in Chinese stocks. Oh, I'm not 100% sure, but China is gonna be fine. Like everyone, like on YouTube and these YouTubers and TikTokers talking about China's economy collapsing. Like, no. You want to come Malaysia when? I don't know yet. It depends on a few things, but I'll let you know in private. There's nothing set in stone yet, so I don't wanna talk about it because there's nothing set in stone yet. But let's just stay in touch. But Malaysia's economy is really good. Malaysia has relatively low inflation, and Malaysia is an exporting country. They like 10x'd, 20x'd their exports within 10 years. It's a manufacturing hub for electronics. So, yeah. Pretty, I don't know, Malaysia good or not. Yeah. No, it's, from what I've seen, it looks good. Yeah. Like, you're so lucky, man. Like, believe me. Emeralds, you're lucky. Like, everyone who's talking about Canada and Europe and like they're lying. They're full of shit. You're good. All right. So, yeah, I guess that's it. Not much more to talk about. Do you guys have any more things you want me to talk about before I go? Like just one or two more things? We went through all the questions and you sound sarcastic about my question on tech rallying. Yes, I was sarcastic. Tech is rallying because people think inflation is like over now. Because car prices were coming. You are on my Discord, right? You are on Patreon, so you see the newsletters. I wrote a newsletter as well. Why it's rallying. Like, actually, let me pull that up. Let's see. There was not today, but I think from the newsletter yesterday. The newsletter market update 10th. Yeah, I talked about it kinda. Gas went up and G went over 10% just to come down and close low, with stocks and crypto are green because used car prices went down and inflation is over. That's why. Because it's not over, but I'm just being sarcastic about it. Inflation expectations are falling because of the energy price falling, since we all know that's all inflation expectations consist of. Oh, and the mild weather hit California, leaving dozens dead and 100,000 people without power. So, we have a second tallest building, do you know? The Petronas Towers, right? Yeah, I will visit. Is gold at today's price still a valid investment? Yes, it is. Got bad internet right now. Can't get in Discord. Okay. But you're on, so yeah, so you're good. So you read my market updates. When you buy silver and gold, you buy bullions and coins. Coins. So, okay, look, this is what you do, okay? Bello, I give you some financial advice. No, not really. Don't take financial advice from strangers on the internet, okay? But I tell you, okay? So before you invest into stocks or ETFs or anything, have 6 months of your expenses in cash. 6 months of your expenses in cash. So if you live off, I don't know, $1,000 or something a month, or 1,500 a month to break even, that's what you want to have on the side. Times 6, okay? So that's gonna be like 6 to 10K. All right. So it's best you put that in a money market account that pays you like a relatively high interest. So I have one that pays me 2% interest, and with my emergency fund that I have, when something happens, like I lose my job or my car breaks down, I can get a loan from myself. I don't have to get like a credit card loan or something and pay that off with debt. I can just get a loan from myself because I prepared for it. Okay? So have that ready. And that has to be cash. It has to be liquid. Okay? Once you have that, have 6 months of your expenses in precious metals. But don't just buy like gold bars. 70% silver coins, 20% or 30% gold coins. And the rest you can do copper coins if you want, like 10% copper coins. But mostly silver coins, because a silver coin is approximately like worth 20 to 30 bucks. You can do much more with individual coins than you can do with a big ass gold bar that's like worth hundreds of dollars, maybe in the thousands. So yeah, and only after that, if you have money over that you can afford to lose, that you don't need in the next 6 months, that's the money you can invest. Okay? Oh, also, the best investment you make is checking out my sector rotation guide or following my market updates on my newsletter. So you know how economics works, how this stuff works, right? Which bank giving you 2% in money market? So it's not a bank, it's actually my investing account. So what's it called? Vanguard gives you a percentage that you hold, and also Trade Republic, which is the German one, gives you also a 2% rate too. And there's several money markets accounts that you can buy, that you can put your money in, but a lot of them ask for keeping your cash there for like 3 months or so before you have access to it. So, which I wouldn't recommend. What kind of coins do you get? Like Royal Canadian Mint? Yeah, something like that. Like something simple, nothing like the cheapest thing you can get. The cheapest thing you can get. Nothing fancy, schmancy, no like, and get silver, like real silver, not like, and real gold, not like, I don't know, rose gold or some bullshit. Like get like actual gold and silver. Okay? All right. And of course, read my market updates. That's probably like the best investment of all of them. I tried to understand, you said I'm so dumb. No, you're not dumb, dude. Like it's your, like it's English. English is your second language. Like obviously you can't. And what I'm talking about is like it's not normal for TikTok. to talk about this stuff. Right? Thank you for the tip, bro. Of course. Not Patronus. It's old Twin Tower. Oh, okay. Number one, but Merdeka 1118 now is second tallest in the world. Oh, Jesus Christ. They're building a new one, right? I heard. In Kuala Lumpur. So as the Fed increases rates more, you think tech will fall? Yes, tech will continue to fall. Because increased interest rates, high interest rates are really bad for tech. Maybe because I'm weak speaking English. Yes, of course, that's why. My recommendation, like if you want to learn English, like just 20 minutes a day, learn like vocabulary and make sentences. Maybe talk to people, talk to me, or talk to people, write things. And then the rest of the day, you want to learn via input, right? So you want to watch movies, you want to watch YouTube videos. Like let's say you Google something, but instead of Googling it in Malay or Chinese, try to Google it in English and read the article or whatever you're looking for in English. And just do that. So that's it. Yeah, you just learned English by watching movies. Yeah, exactly. Can you talk details about difference between commodity ETFs and commodity futures? Yes, I can. So if you go to check your investment, okay? There is there's you open the prospectus on that investment. It's called a prospectus. Well, in German, I think it's called prospect. I don't know. I think you're Canadian anyways. So open the prospectus and then go under holdings. So in the description, it says, this is an index or ETF that is designed to blah, 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 hold 12 core commodity positions via futures. It says futures. It says there. But go to holdings to double check, to make sure it's a futures ETF. Go to holdings and see what the holdings are. So if the holdings are Exxon, Shell, and some company names, that's a commodity stock ETF. But if you see in holdings that it says bonds, blah, 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 cash 90%, and copper, steel, contract March 2024. That's a futures ETF. That's how you can check the difference. You can also just call your broker and ask them if they have those investments, and they will tell you. I just learned English. What are the market macro conditions that tell you when to get back into tech stocks? So you want to be in tech stocks when the environment for tech stocks is right. So tech stocks go up in an expansion phase of the business cycle. And when is there an expansion phase? When interest rates are low and when inflation is low. That's when you want to be in tech stocks. Dharma Kit, if you go on Discord, go to Discord Lion's Dent, and then in the Lion's Dent there's Sector Rotation Easy. It's basically lesson 2 of my Ultimate Sector Rotation Guide, and in there it explains how the business cycle works. So right now, do we have low interest rates? Or do we have rising interest rates? Rising interest rates. Do we have low inflation? Or do we have high inflation? Or is inflation rising? Inflation is rising. So that's the environment for defensive sectors and commodities, not for tech. I hope that makes sense. All right. All right, guys, it was good with you. I was streaming on on Discord as well, but I was looking into the phone more than I was looking into the Discord stream, because there was actually no one asking questions and stuff on Discord, because they don't know I'm live, probably. That's why. All right, I'm gonna do this again on Wednesday, okay? So every Wednesday, you can actually see me streaming on Discord, and I'm gonna upload that stream on YouTube for the premium members first, and then I'm gonna upload it a week later for all the mortals, for all the freeloaders, which is in free chat, think they can get away with the cheapskating. Just kidding. Okay, I'm just watching you. All right, sir. Natural gas falling. Do you think it's time to buy more? Yes. While selling nat gas companies. What do you mean? You want to sell or you want to buy? Like I'm going to buy more natural gas while it's cheap. Okay. So. But markets are super forward looking, so we need to be in tech before those indicators. Like, look, you can invest into tech if that's your strategy. If you dollar cost average, you can be in tech and just wait for, I don't know, the Fed to eventually pivot and all assets go up, right? But they're not gonna do they're not gonna do quantitative easing with the Fed, right? They're gonna just straight up monetize the debt via the treasury. So short term, yeah, sure. All assets are gonna go up. Like, we're gonna go hyperinflation. So, but I wouldn't put my money into tech right now. It's stupid to do that now, because everything is looking like all the fundamentals are facing the other way. Why would I be investing into something where I know it's still gonna go down? Like, the market environment is not gonna adjust to become in favor of tech anytime soon, right? Inflation is not gonna go away. I don't know if you know that, despite what the media is gonna tell you tomorrow. The CPI coming in lower. Oh, inflation is gone. Yeah, yeah, maybe there might be a short tech rally. Yeah, because people think inflation is over because they're stupid. They don't know what base effect means. But I know, and that's why I make money, and those people don't. So we're working, listening to you. Nice. Oh, okay, Crypto Chimp, you are listening to me on Discord as well? I don't know, man. Charm, I don't know what's your problem with my sector rotation graph. Like, I don't know. Anyways. Okay, besides natural gas, what other commodities are you bullish on? Industrial metals. Buying the gas futures but selling companies that sell gas, like Oniok, for example. So I'm buying gas futures from the US. So I'm buying US natural gas because Freeport will reopen, supply Europe with natural gas for like super expensive. And then the super low price natural gases in the US compared to Europe is gonna like meet an equilibrium. It's gonna meet in the middle. And so that's why natural gas is so bullish, but it's like futures from the US. But if you want to sell gas like stocks, like why would you, like, I'm not sure, like why would you sell gas like stocks, natural gas stocks, like right now as prices are crashing, right? Like I don't understand. You want to sell when prices are up, right? Like when gas prices are up and those companies actually make money, and have good returns, that's when you want to sell, right? You don't want to, I don't know. Like I wouldn't sell for a loss. Let's put it that way. All right, I'm just gonna leave now. I'm gonna answer Charm of Melody because I don't know, man. Like for some reason, like I don't know. Do you don't want to get it? Like I don't know. Are you listening right now, Charm? All right. Anyways, I'm gonna go. So yeah. See you next time. Okay. I'm gonna come live again. Like between now and Wednesday, I'm gonna come live again. But Wednesday, 6 o'clock, I'm gonna be live for sure. So next Wednesday. And you can watch me on Discord as well and ask questions and stuff on Discord. So it's like companies like, okay, who value rise on good returns. They peak now. Okay, if they peak, look, then you can sell. Like I can't give you advice for individual stocks, but if you think they peaked, if you think, hey, that's it, it's a good, you make money, that's good. But I wouldn't sell for a loss. If you don't sell for a loss and you sell for profit, good.